All right, well, thank you. Thanks a lot for the introduction. Once again, just want to make sure everybody can hear me okay. Can I just get a few Ys in there? Just let me know that my volume is good. All right, good, good. All right, so this is going to be different than the previous two presentations. Both of them were superb. I liked them both. They're great systems. Very well done. Congratulations to those people. We're going to be looking at something that has to do more with price action and market behavior. And I want to be very sensitive to your time. You guys have been in here, ladies and gentlemen, have been in here a long time today. This won't be that long. I'm going to go over two markets, crude, and I'm going to go over current soybean trade. What we're going to be doing is looking at how markets move and how they act and how they behave relative to internal bars and relative to daily, weekly, and hourly bars. We are not selling a system here today. In fact, I'm not going to be selling much of anything here today. I'm just going to let you know what we do is teach people how to trade the markets. So for those of you who are systems oriented only, I wouldn't want to bother you or waste your time if learning how to trade the markets manually and by hand and using technical indicators later down the line aren't of something that are of interest to you. You've been here a long time today, and I wouldn't want to waste your time. So, because what we're going to learn here today is how the markets work, how they act, how they behave, and how to manage trades from that point of view. We're also going to talk about trader psychology, because whether you have a system or whether you're doing it manually, people override their systems all the time out of fear. And people override all kinds of trades, whether they're manual systems or hybrid trading systems, out of fear. So we're going to talk a little bit about that today as well. Just a very, very quick background on myself. Closest and dearest trading friend and friend of all time is Michael Marcus. If you don't know him, you should probably take the time and do some Google on him. Michael Marcus Trader is the best way to do that. He's also in the book Market Wizards by Schwager, seminal book. If you haven't read it, you should. Another great mentor of mine, Ed Sakota, for systems traders, speaking of systems. And really what I do ultimately is a hybrid of the two. Michael Marcus is a very flexible, hands-on trader, and Sakota is a mechanical trader. I try to blend the two together here to make something work. All right, so let me move on here then. What we're looking at here is a chart of crude. And the way I'm looking at the screen, I'm going to ask you all another question here. What is projecting is slightly different from what I see on my screen. So I just want to make sure that everybody can see what I'm circling here right now. Can I just get a few yeses that on the projection screen that you see me circling this area right here? See my cursor right around this area? Yes, yes, no, yes? Excellent. Okay. All right. So we're looking at a chart of crude. I'm going to draw some lines here. So what I want to do is start forward here, and then I'm going to move backwards a little bit. So let me just let me just point out this trend. It's very clear we've got a rising trend here. And all trades have a beginning point somewhere. I prefer to have picked up this trade where it happened, right down here at this low, but I wasn't paying attention to crude at this time. I was paying attention to crude up here at around this time. Right in here, right up and around here. And it was right about on this day right here that I have highlighted that I decided that we probably had a trade that was looking like a good long. And my colleague said, well, why? What's so great about this? It looks like it's selling off. Well, it was selling off. It looked like a natural correction to me and a natural uptrend. If you look at this beautiful stair-step pattern, and it's just going up beautifully. Couple of issues of concern here. We've got we have a double top here, you can see. Some people like to think of these as resistance points, and some people like to think of them as resistance points that can be broken through or bounced off of. And debatably, it's a bit loose in technical analysis. You could argue that you have sort of an averaged triple top here between this area right here, and highs here would probably average right in around here. So it's another way to look at it. No question, we do have a double top here. But I'm looking at the major trend here, and I see, without question, this trend is going up. It's also in an ascending triangle formation here. I'm just going to draw some lines here quickly so we can make this super clear. All right. I'm going to draw a line across this top here. pretty basic stuff. I'm sure all of you know this stuff, but we're looking at an ascending triangle here in a trend mark, in a trending market. So this is one of the reasons why the double top, or arguably, debatably, uh, might be argued as a triple top, um, is not going to be bothersome to me. So at this point, then I'm looking at an opportunity to buy, and it comes really it comes after this day right here. Now, right here, what we have is a bull feint. We had a nice sell-off here, and the market is looking for a way to go back up now, and it happens on this day, but it's a feint. The bulls aren't really ready to take it up, and the bears are trying to take control of this market, and they push it back down pretty hard. So all those people that got back in on this rise were disappointed. Some people stopped out. Strong hands pushed this market right back down into this range here. But what made it very interesting to me, and the day that I had my confidence lit up, was the day when it did the same thing on the downside, back-to-back feints. Um, so here we have the same thing. Probably in this situation, actually, in my view, without a doubt, you have a whole bunch of stops right at this level right here. Um, and so what happens on the next day is these stops get punched out. They're just sitting in an obvious spot as stops go, and it's very easy for these things to be hit when they're that obvious, and that's exactly what happens here. But it's also a double feint here. It pulls the stops, and it also gives the sense that maybe this market's going to go down, but it ends up higher on the day. So we have a bull feint right here and a bear feint right here, and this is the trade that made me believe that we had something working out pretty well, and went ahead and got long this day. And it so happens in this case that the trade worked out pretty well. Um, Enjoyed a nice ride right up to this little congestion area, not much of one as you can see. It's only 2 days here, but it's a continuation triangle of 2 days. Now, it's too small to be really significant in terms of these sorts of patterns, but I still pay attention to them in case they act out, and in this case, it did act out. So I'm just going to go ahead and put that line up there real quick. Again, I assume that most of you know this stuff, but I'm giving you an idea at how we historically have looked at markets, trade these things. Um, in the fund that I was in with Michael Marcus, and also personally, his own account and my account. So this is a continuation pattern, very small one, and something to be paid attention to. By the way, I just want to say that I won't be looking at the questions as we go along here. Like the first presenter said, I need to focus on what I'm doing here. So if there's questions, if you could hold them to the end here, that would be great. And as I say, this won't be terribly long, so way too long to ask questions if you have them. All right, so this continuation triangle gets fulfilled. Now, if we're going to add to the position, I'm going to take a chance to buy it right outside when it breaks here. And in this particular situation, it breaks very, very well to the upside. We never look back. Fulfilled itself very well. Very nice trade. So we're doing pretty well here. This is accrued. It's $1,000 per point. So, for example, from 96 to 97, that's $1,000. Very easy to calculate. It's $10 per tick. So let me just jump back here. I don't remember exactly the entry here, but let's assume it was on the close. We got in at 129. Now I'm going to do some easier for me to round. So you'll pardon me, just round to $100, and I'm going to say on the close of this day, I'll round this also. From $100 to a close of 102 is $2,000. It's a little less than that because I'm saying I'm rounding. Then we have a nice trade up to the upside here. And now this becomes very interesting. What we're looking at right now is pure technical analysis. This trade was made solely on technical analysis, looking at the back trend here, looking at these patterns, the ascending triangle, the uptrend line, the continuation pattern here. It's purely technical. But one of the reasons I love this trade, and I like to talk about this trade, is it becomes a product of both technicals and fundamentals right up in this area right here. Because it was right at this time that ISIS had taken over the oil fields, one of the major oil fields in Iraq. And what you expect to happen when these sort of things occur is for markets to get very nervous and jittery and continue to the upside. And that's exactly what I would have expected. And yet what it's doing right now is consolidating and coming off of it. Now, this isn't uncommon either in a jittery situation for markets to trade in against you before they resume up. And that was my initial reaction here during these first few days here. Just some profit taking based on this total move here, certainly based on the beginning of this new move, this double top area. Natural profit taking. And the next couple of days, we see the market rise. looks good. Next day it gaps open, but it comes back in and closes below the previous day's low. We just have a whole lot of indecision here right in these 3 days. Wide ranges often mean indecision, a lack of clarity, and seeking direction here. We don't really exactly have it. This whole area would be considered sideways to down. Technically, uh, sideways to down, lower highs, and pretty good support levels right through here. So if you just give me a second, I'm going to draw a couple more lines. And what I want to point out here is expert traders know, and you're among that crowd, I assume you know too, and if you don't, let me enlighten you that any time a trade doesn't behave the way it theoretically ought to, these things are hard to predict, as you know, but any time a trade doesn't behave the way it should, and when ISIS or a militant terrorist group takes over an oil field, you would expect prices to go higher, but what they do here is they actually begin to break. They break because the big boys and the market itself does not see this particular situation as a threat. And at the same time, there was also a question of some Libya oil being tight and not being online, and that opened up. Combination of the market not viewing ISIS in this oil field as a threat and Libya opening up her pipelines created the perfect scenario here of recognizing fundamentally that the market wasn't paying attention to ISIS in the oil fields. It didn't care. That Libya fundamentally came back online, was producing oil for us, and technically it broke these support levels. So 3 good reasons to think I want to sell this. Now this is not exactly an easy sell, and it's not a great trend line here. I'm not going to fix it. It should be straighter. In the name of time, imagine that that's a straight line. It's a tough trade because if you sell it right on the trend line here, you have to suffer through some of this trade back up into above the trend line and make you second guess your thinking. However, you can see on this day the trade isn't that high back up there. So there's really not that much to be skittish about. And in the event that this is a trade that's going to go against me, we'd have a stop right here above this high at 103.63. Shorted this thing, broke this on the close, and the close here was 102.78. So the risk is very small in this trade, and that's the way we trade this particular situation because the fundamentals are in reality dangerous, ISIS, but oil coming back online and technically very strong to the downside. We can feel pretty confident that this is going to go south, and indeed it does, and enjoy this trade all the way down to this bottom here. At this point, I am not clear on what's going to happen, and I'm not convinced yet that we have a downtrend. My stop is right here above this daily high here. We are using daily charts here, by the way. And this high is 98.64, and 2 days later, it violates that high, and I'm out of this trade. And pretty strong couple of days up here. Again, I am now unclear. I'm not in this trade. I don't know what's going to happen. If I'm going to get long again for my money, I'm going to want to see it break this resistance level that I sold it at 103.7. Let's just say 103. And I'm going to resell it as it creates this sideways pattern here. I'm going to do the same thing here that I did up here. Again, I'm going to draw a line here. I know you can see it, but let me just go ahead and draw that line. Helps clarify things. These are imperfect lines, but these make the point. I'm going to be selling if it breaks that line here, and indeed, we get the same sort of break here. It doesn't close below it, but this day, next day, it does close below it. And I like to see closes below these things to give me a sense of confidence. These markets can go up or down. I don't know what they're going to do. So I look for a close below them, and I'm on guard for the next day, because often when you go short or you go long, the next day always tests you, and it seems to happen quite frequently. Very rare moving back over to here that you get a breakout of some pattern. It happens all the time. It just seems to be rare that it happens for you all the time. We are often tested when we get into markets right away. And in this case, we do take the short on this day on the close at 98.83. And we are tested, but not by much. In this case, I'm going to get the stop above this day's high, 100.5, and it never sees that. And it does a very good job of selling off here. Very, very good job of selling off. Now we have the same action and same behavior here. I'm feeling pretty good about this as a short trade at this point now. This is just selling off. How can ISIS not be a threat? Well, it's not a threat. It's not being paid attention to. We have a pretty good sell-off here. Got a little correction to that sell-off. Now we've got a really good run down to this level. Now at this point, I'm looking at this area as nothing more than natural corrections to this sell-off here. I do have to pick a place to get out, but I'm feeling more confident about the short position of the trade here. And so I am going to put it at this resistance level right here. Again, an imperfect line, but makes the point. It's right above this area right here. I think if it can violate that and close above it, then I'm confident that this market's going to go a little higher, and I'm just going to be out. It may resell at some point, and I can, or back below that line there, and I can resell it if I think it's going to get weak. But in this case, once again, I get lucky, and this trade's just working out. Now, these don't all work out this way. That's just not the way this game works. And as the first presenter said, and I agree with, um, if you're not comfortable with taking a loss here and there, or losses and you're comfortable with whatever that number is, it may be a business that's going to be difficult for you to put up. Losing is a very big part of this game. It's very important to understand that losing is a part of winning, and you don't take any of this stuff personally. Very important to learn how to objectify this business so that you don't take too much personal. In this case, this works out very well for us. We keep this short position. It doesn't close above it. We get to ride this down here. We get to ride it back up again. Um, by the way, as I walk through this trade, it's very important to understand that psychology, as you work through this, is very, very critical um, to holding on to these trades. Because what we're trying to do here in this particular situation, it'll change a bit when I get over to beans. I'm going to show you some soybean stuff. Um, is psychologically handle these swings back up in our face. So, for example, to sit in this trade from 92.65, this low rate here, to this high, 90, 96, let's say, that's $4,000 on a one lot. And you've got to be pretty confident, pretty comfortable that what you're doing is the right thing to do. So the second part of what we do here is apply certain technical indicators. I'm not going to do that today, but we do apply certain technical indicators to help us understand when we think we have a trend reversal, or if we don't like these $4,000 moves against us, how to get out of the halfway point or the 30% point, or a point that's comfortable for you, and re-enter them. Sometimes re-entering these trades can be difficult, and things like this happen, very volatile. And so you do re-enter the market, but you get caught up in wide swings like this. So the first thing we want to try and do is hold on to the trade. It's very important in order to get the best benefit here. Now, it's oft said that let your profits run, cut your losses short, but no one really ever gives you any context for that. It's a simple thing to get out of your losses. You just click sell or click buy and you're out. It's a very difficult thing to know when to take your profits. That's a much harder thing to do because as these things run, we have no idea where they're going. We don't know when it's too high or long or too low if we're short. And I think that's the toughest part of trading is knowing when to get out. Not when to take a loss, but when to get out. So a good deal of what we do is work at iTrading on your trading psychology, how to manage trades that are cutting into your profits or cutting into your initial position, whether or not you should hold it, whether or not you should get out and try to re-enter later. Ideally, again, to repeat, we want to hold these trades as long as we possibly can. Sometimes it's not possible. In this case, we are able to hold it. I don't like this area. I am personally very nervous through here. It's wide, sloppy, and these things can often indicate a trend in change, a change of hands. A lot of wide swings. You notice this day is very, very sharp down, and the next day counters that very, very sharp to the upside. These are very uncomfortable moments to sit through, but there are ways to do that using really solid, strong technical indicators that will remove some of the anxiety that goes along with learning how to trade. One of the reasons I'm so bullish learning how to do this stuff manually is because I really believe personally that you have to understand the stuff of the markets, and that's in price action and market behavior, and it's all the stuff that's behind the system as well, whether you're a systems trader or trading your own account using technical analysis, a hybrid system of TA, manual indicators, whatever the case may be. You're going to want to understand, or do your best anyway, to try to understand what's going on here. And I personally believe that is to have a basic understanding to an advanced understanding. What is the stuff behind market price action and behavior? All right, so in this case, wide swings, a bit discomforting. What gives me confidence? I'm just going to draw another line here that I believe anyway. That's what it's all about, what I believe. This isn't exactly a great downtrend line across these tops, but it gives me a sense of comfort, and I need something to go by. Um, I'm going to change my. Okay, so it gives me something to go by. I lost that line. I apologize, but it's right through here. Lower highs. This high is a little higher than this, but it gives me the stomach to bear through it. And this stop up here gets lowered down to this level right here. And it's not much. It's 95, 90-ish. It's about a handle lower, about $1,000. Ultimately, this ride is also rewarded um, um, all the way through this, and we did catch this ride all the way down. And here's where I want to point out that we took some hits. All right, so not all is glittering in the food market all the time. So we did ride this low all the way down to 79. Let me fix the screen here so you can see it. All right, right there at 79.10 is the low of this particular trade. And I've changed this now to a 30-minute chart just to show you what happens when something like crude or anything for that matter strikes a temporary low. We don't even know if this is a temporary low. So what happens here, of course, is we have a very hard bounce from 79.10 all the way to a high of 84.15. So we're round down to 84. This is roughly a $5,000 move. Let's look at this on an hourly basis. So here it is right here on an hourly basis. Right here. Just counted the hours to show you how fast these things can move here. So at 6 in the morning, we see the low, 79.10. Seeing 1, 2, 3, 4, 5, 6, 7 hours. Basically one trading day, 5 handles. This is a lot of volatility. And if I go back to the daily here, I'm going to be transparent about how we trade here at this 79.44 level. I'm out. Pardon me. It's not quite there. It's over here. So let me find this. It's important to find this. Bear with me while I find it. There it is, 79.10 level. I'm out. I'm just out of this trade on the basis of huge volatility. Hits this low and then bams right up here. In my case, I'm gonna be getting out. Did get out around the 81.80 level here, 84 level here. Quite a bit higher, 3 handles higher, not 3 grand higher. But we rode this trade so far down that it really didn't hurt all to give it up. And the feeling here is that this stuff is going to trade lower and just catch it at a better time. And a few of those better times came. Let me just move over, at least so far as I saw it. Let me just point this out here again. So we see this rise right up through here to the 85 level here, again on the 1-hour chart right now. And it comes all the way back in. So I view this as very, naturally you do too, as very volatile and big profit taking on a big move. All taking place over roughly a 7-hour time frame. And then we go several days, Friday through Wednesday, sideways. Some blips up here, some blips up here, down here, a couple more up here. And we have another major break right here, which makes me believe that we're about to trade off here and we're going to go south and continue this move. Now, this initial move was big enough. Let me just show you the daily move, how it is I lost on this position. I'm going to say we don't win on everything, and no one does. Trading's an imperfect game. We just try to do the best we can. So that's a big move down. That's a very strong move down. Let me point something else out before I move back to that hourly chart here. Pardon me for that. Very big, very big downtrend line here. Couple ways to draw this. You know, technical analysis is both science and an art. I make exceptions. I think we all do. Open up this a little bit so we can get a look at it. So, a second, please. All right. Not getting the expansion I want here, but here's the point that I want to make. Very, very strong downtrend, as you can see, from the high of 105.31, sideways action here, and then a super break all the way down here. And this is technically a bearish pattern here. Technically, it's a big, comfortable size descending triangle. And I expect this stuff to get broken to the downside here, and indeed it does. It gets short here, and I have a stop above this high here, and this comes in and takes us out. So these are the situations where I think these trends are going to continue. They don't continue, and you have to figure out a way to get out of them so that they don't eat away at your profits too badly. Next thing that we want to do here is notice that sort of a giveaway right here in this day. This blew through. This blew through pretty decisively. This low here, 80-30 level to 79 low here. Or coming up and closing very, very high in the day. This is another stealing of stops. It's doing two things here. It's making the bears, people like me, thinking that the trend is going to continue, and the trend does not continue. It closes higher, and it blows out those people that got short here. It closes higher in the day, and today you can see that it's much higher here. It's right on these lower trend lines here. It remains open to see if this trade goes lower or if a bottom has been seen, trades higher. I go out on a short limit here, I think, and say that I expect this to play around at these levels here for a bit, but I still think the stuff is going to go lower. My initial price projection was 77, based not only on technical analysis, but some of my technical indicators as well. And if we look at the weekly here for a minute, you can see support is right around 77.45-ish, right in around this level, arguably a little lower, 74, 75. We could average that around 76.5 right in there. But if we, again, look at the price itself here, it did blow through these important lows, close higher. I'd say the jury is out for most. My view is it's still going to go down. I'm looking for that opportunity, but I'm not married to my bias. I keep an open mind, and if this stuff can close higher and stronger and show strength in the coming days, I may move to neutral or may take a new position on this trade. All right, so to the long side. I'm going to move over to beans here for a minute. Talk about what happens when you catch a good run, and how to handle the market when it moves in your favor very nicely, and how to think about your stops. Low of 905.50, very strong day rate here on the 6th. Blew across good solid week here. You see, basically from this day right here all the way through this, which indicates some nice strength here. That is met immediately with a sell-off here, an inside day. Another sell-off here a little lower, but notice that this day right here, that pushes everything back down. It pushes the full move down on 10.10. It closes on the low, but it does not really do a decisive job of solidly penetrating the highs here. It's down there, but it doesn't do a really great job of it. Most of the range took place above it, and paying attention to that. And I also like the fact that the 3 days preceding it are all above its close on the low. And the next day here, we get a pretty strong rise above this. I'm going to draw a line again, just so you know here. We are nearing the end of this get-together. So done. All right, so this is what I'm looking at as I start to think about this trade or not. And on this day, I am long this trade. Now again, this is uncomfortable stuff sometimes. I like this because it's a super strong, it's a nice open, very strong day, opens on the low, closes on the high. And this day blows through, as I say, all of this stuff here. Doesn't quite get above it, but it blows through it very well. Pardon me, I'm sorry, I'm over here. My apologies. This blows through most of the closes of the previous days. So I like that. The close to me is the most important price because range is critical. But at the end of the day, traders will tell you where they think price ought to be. So I pay more attention to closes than anything else when it comes to figuring out where I think market's going to go next. And on this day, I do get long, and I think I'm right here. Um, so far, I am right. And I'm immediately met, as I mentioned earlier, this happens to a lot of us all the time, selling off the next 3 days in a row, but I'm going to keep my stop right at this point here, right where the initial point was I felt was support resistance level, in this case support. And I have to sit through a few days of downward pressure, and I'm rewarded for doing so. Next day is strong up, tough day down again against me, strong up, tough day down, very strong up, and tough day down. So this closed higher. This is a very, very difficult day today. Market closed. It hit a high of 141. And as you can see, can't see, get it for you. All right, so 141. And then, and this is overnight. And then we're met with this very hard sell-off, very, very hard sell-off. And looking at this on an hourly basis, I'll tell you, I got out of this trade at about 1020. That is a price of 1020 because I didn't like the way it looked. I've seen, I think the average true range on this is about 22 points. It was about 36 points today, way over its average true range. I didn't like that. It spoke of high volatility. I was not clear at all as to whether or not they were going to sell this all the way back down to the mid 10 levels, levels up. A natural support area here would be right in about 1003, right in about this level right here. These highs are, and these highs are. So roughly at about 1001 actually. So I saw that as a possibility. I didn't like the move, and I got out of this trade, and that was the end of it. So it's very, very important to understand where your stops are going to be, where you're going to exit a trade when markets get volatile, how you're going to look at stuff that's going in your favor. Particularly in a trade like this where each day is up, then down, then up, then down, then up. Say this is looking up, but it's really this is an in-your-face day. So a lot of what we teach at iTradingU, a good deal of what we teach at iTradingU is the psychology behind how to handle the moves that are both working for you and working against you. Uh, if you think it's easy to handle this move, if you look over here to this big sell-off here, we're awful happy for a move like this. We love to have these happen. These are stressful and difficult to handle too because we don't know when it's going to rebound or move in our face. In this case, it just kept going down. Everyone in this trade had a beautiful trade and enjoyed it. Uh, but these happen quite frequently where they just bounce very hard back in your face. So before you know what it's going to do, you're left with figuring out, well, how do I handle this big move? In this case, let's just look at it. 1398, say 14 even. 14 even down to 1228 is a huge move and not an easy thing to sit through. We're happy here for a little bit, but we're worried also at the same time, where do I take my profits? And the education we give, and we do it through mentoring, we do it through high-value mentoring, is all about psychology of trading, managing your emotions in a trade, using technical analysis, some small amount of fundamental analysis, like we talked about earlier, the ISIS trade on crude, uh, to properly enter trade, look at how markets behave, how price action behaves, how to think about that stuff, and then how to adjust your trade accordingly so that you're a more profitable trader. And we do this simply by teaching the basics and moving on as you move on to advanced technical analysis, a dose of fundamental analysis, and a heavy, heavy dose of psychology of trading I'm just going to end it with this, and I'll take questions if you have them, that success in trading isn't necessarily the function of the size of your account. It doesn't really have all that much to do with it. You can have 25K or 100K or $1,000,000. You don't know what you're doing, you're just going to lose money. If you have a small account, you'll lose it quicker, and if you have a big account, you'll lose it faster. But it's a myth out there that the size of your account has everything to do with whether you're going to succeed or not. How you manage your emotions and psychology has everything to do with whether you're going to succeed or not. And then, of course, really understanding these markets and understanding what they do, how to manage them, how to think about them, frankly, just how to trade. So you must have a super solid skill set. We teach that. And you must have your head screwed on really, really well. We teach that. If you don't have any of these things going on, the account size isn't going to matter. On the other hand, uh, if your head is screwed on really, really well and you understand how to manage your emotions and you know how not to manifest your personal stuff in each of these trades, like, for example, gee, this trade has to work out, I'm going to go broke, or I can't pay my mortgage, or I can't pay my credit card bill. If that kind of stuff is manifested in your trading is not going to win. So we teach you how to clear your head and make it a clean slate so that you can have a higher degree of success in your trading. And I am going to move it right out to questions if you have them. And I want to say thank you for listening. And here too. So what's the basis for entering a trade is the first question I'm getting. It's a great question. I'm going to go back to the crude and show you the basis on the crude trade as one example. In the case of this crude trade, if I could remind you, all right, good. I want you to notice on a daily the date of 6/4 and the date of probably 6/5, assuming. Yeah, 6/5, 6/4, and 6/5. Okay. So note those dates because I'm going to come back to them. Uh, it's about on 6/2 that I'm noticing this sell-off. So the question once again is, what's my criteria for entering? In this case, when I begin to notice crude, my criteria for entering is this. I see crude down strong on 6/2, which is the day that I happen to see the trade. This is the day it appeared on my radar. So I see this, what looks to me as a natural sell-off, and I look backwards in time, and I see this beautiful uptrend. As you can see too, this is a very comfortable uptrend. I see an ascending triangle here, two tops here. As again, I said earlier, this is very open to debate. I don't want to make it much of one. You could argue that this is an averagely triple top here. We definitely have a double top here. These things create resistance. But when you have a double top occurring in a rising situation, they tend to get pounded at and broken through. Does it always work? No. But that's the tendency, is when you have a rising market and a flat top here, triple double, whatever the case may be, the more times attacked, the more likely it's going to go through. So the criteria for the trade then is, I see this happening here on the second. I see this selling off. I look backwards in time. I start doing some basic technical analysis. I see that this looks very strong technically. I like the way it looks. And what happens here is what many people would do is wait for this this double top to be broken. Fine, there's no problem with that. You can do that. I'd wait for a close above it. That would have put you in on this day. Another aggressive way to do is to simply buy it the minute it breaks through, and that would have worked very well in this case. But what I did was I noticed these feints here. So the question is, what was the strategy for entry? This looked like a good day to get in. I got lucky. To be honest with you, I didn't get in this day. I could have very well entered this day, and I probably would have gotten out and taken a loss, but I just didn't get in this day. And it was this day that made me think, okay, the next up day I'm going to get in, because these are two feints back to back, bull feint and a bear feint. And because the bear feint happened immediately after the bull feint, it just gave me a sense of confidence that this market was going to go higher in conjunction with the technical stuff that we just talked about. Double top, rising wedge here, ascending triangle rather, and it just happens to work out. I get long on the close of this day. I don't love it because it ends up slightly mid-range to lower, but it works out the next day. Okay, let me answer a question that I know will come up if it hasn't already. Um, uh, Entering this day, I would have had a tight stop. I would have had a stop, very low risk stop right here at about 99, 70, 60, somewhere right in about there. I view that as support, and the reason I put it there is because the market already punched through it once, and I'm thinking it won't do it again. It grabbed all the stops that were there, and it closed higher on the day this day. So to me, the likelihood, having seen this 101 times in my life, more, I'm thinking it's not going to go back there again and again. In this case, I got lucky, and it worked out, and they don't always work out this way. But in this case, it did work. It never looked back, and it gave me an opportunity to pyramid right here when it broke this mini ascending triangle. So that's how I added on to the trade, and that was the genesis for entering this trade. Um, does that answer your question, Sean? Jim, you're asking a question that you all right, so Sean's asking, do I always use price pattern rationale? Well, no, I use it as part of the total tool. So let me take a second here to explain once again. We have a pure technical play here, so that says yes to your question, Sean. But up here we have a combination of technical and fundamental. All right, so I'm looking at this situation here, thinking, wow, ISIS is in the oil fields of Iraq, one of the biggest ones, and that's a fundamental play. Market should have reacted negatively on this, which in the case of crude is up positively in terms of the upward motion, but the market should have taken a negative view of them being in those oil fields, and it just didn't. So here's a case in point where fundamentals begins to overrule my view of the technicals. This is not the appropriate behavior for a market that's being threatened, and crude is threatened by terrorists, and it's doing this? No way, no how. So now I'm going to say, well, the market's not paying much attention to this, and I'm going to start using some technical tools to see a way to sell this in the event that the market doesn't follow through. And it didn't follow through, and technical analysis comes back into play here. And so I use technical analysis to sell this market right here. Jim, I don't completely understand your question. I don't know what VSA is. Do you want to clarify what VSA is? By the way, it makes no difference if you trade futures, Forex, um, futures, forex, options. This is all technical analysis and fundamental analysis. You think of this as a light switch. This is the stuff that turns on and off trades, and how you express that trade. However you choose to express that trade doesn't make a difference. All right, Jim, I got it. I don't really use volume anymore. I learned on volume, and I find volume really, really attractive in quiet markets. So I look for markets that are super quiet, that no one's paying attention to, primarily in stocks, because there's so many more stocks that have potential upside opportunity that no one is quite on board with yet. And I try to find those quiet markets and then look for volume bumps in there. But for me personally, the way that I read volume and interpret volume, it hasn't worked all that great for me. So um, volume is meaningful. I don't want to dismiss it. I just haven't found it a great tool for me. I find it, for me, it's misleading. And one of the things everyone should take away from this is that everybody's got a style. And for Jim, volume, it sounds like something works pretty well for him, or that he likes using. You should continue to use it if you have something that's working for you. It just doesn't work all that great. All right, so are oscillators ever of any value to buy and sell decisions? Yes, Sean, they are. Yeah, you're welcome, Jim. Yes, Sean, they are. So one of the tools I use, I haven't put up here today because I'm not prepared today to put it up against these charts, are I really like the DMI oscillator. I happen to like average true range as a way to understand what range should look like. I use the 14-day. I don't do too much custom tweaking here. I'm not trying to be smarter than the people who develop these things, but I like average true range as a way to understand what range might look like and give me an idea of where I might get out in the event something moves hard against me, like in soybeans today in the example I gave, um, and what range just ought to look like before I get in or get out. One of the things I like to do when I'm buying, just pass this on to you, using average true range is one tool. Um, um, I like to look for a buy signal and then wait for that market to come in against that buy signal about 70% of the average true range. And what that gives me an opportunity to do, and this doesn't work all the time, but it's a nice little trick to try to find a way to buy lower if you believe in your bull signal or your bear signal. Let's just say it's a long trade and you get a good solid signal. These things have a tendency, back to beans here for a second. These things have a tendency to, on the way up, just look here, just take a look at here. Fix the chart here. Yeah, on the way up here, tend to give you, up days, down days, up days, down days. But if you have a good signal, then you want to trade the long side of this. So this is an example of where average true range, if you, along with your system, if you get a good buy signal, it might give you an opportunity to actually buy it on this down day, or this down day, or this down day, or this down day. So that's something I try to do, is use ATR as a way to get a better entry buying lower after I get a good uh, bullish buy signal. I do use, as I mentioned, DMI. It's one of my favorite indicators also. DMI oscillator, ADX I like. Um, I do customize stop and reverse because I do like it as a way to not enter markets, but as a way to manage stops. And I use most of these things consultatively. So I tend to do my own work, but I look at these things and let them speak to me and keep an open mind about what they're saying. Any other questions? Thanks, Sean. Appreciate that. All right, so I'll look for more questions here, but I'll wrap up by saying, once again, what we do at iTradingU is we don't teach and don't sell classical systems, and I'm not selling that today. If you're interested in some of the stuff that we did, I think we'll be pushing out a landing page. You can let us know. We'd be happy to call you and talk to you. No hassle, no pressure, no nothing. It's up to you. It's not up to us whether you want to be part of this sort of thing. Some people are pure systems, and some people like to get their hand on the stick shift, and some people like to do hybrids. So I take sort of a hybrid approach. I like to have my hand on the system, but I do like to use some technical tools to help me along the way create clarity and see what's going on in these markets, help me identify trends a little better than my eye can. But I like to use market action and price behavior to help me figure out where to get in a little ahead. It's a little aggressive, but ahead of these moves. And I'll just cite the crude trade one more time. I'll move on here, close out here. But this is just an example, once again, of where using price action and market behavior, recognizing these two feints here, and the totality of what's been happening prior to it is a way to enter early. In this case, it worked out. In this case, a pyramid worked very well too. Um, and so if we had done it purely by technical analysis and traded above these two double tops here, we would have gotten them much later. We would have still had a nice run, 5 roughly, probably not that much. Still would have been a couple grand trade, but in this case, it was several grand. Um, so we teach you how to trade. We teach you how to think about price action and market behavior. We do bring in some indicators to consult you, as I say, to be consultative. We like you to be able to look and think and understand what's going on. So we'll teach you the inner workings of the market. We'll teach you how to get your head screwed on right to deal with markets that move both enormously favorably in your direction. Those are not easy to handle, but especially those that are moving against you well. And also when things aren't working in your favor, it's critical to know how to handle all of this stuff. So from technical analysis, fundamental analysis to psychology, that's what we do. And if you're interested, we'd love to hear from you, tell you more about what we do, give you more detail. And I'll leave it at that. Oh, exit signals, Sean. Uh, as I say here, this is sort of a hands-on approach. So the exit signals are a function of a couple of things, some volatility indicators that we use, and visual. For example, in the bean trade today, when it came off from the high of 1040 down to, I think, the low. So let me go there real quick and let me just give you an example. Uh, break this up a bit. Just bear with me. Get the screen. All right. So you can see the high at 1041. There are several ways to handle this. we build in some volatility indicators that tell us, that suggest to us we might want to get out of this trade given the rise. And we have other indicators that say, while your volatility indicators say you may want to get out, bear in mind this could be a natural correction to 1041. 10 very high, happened overnight in night markets, and New York and Chicago woke up to these, and thought maybe it was time for some profit taking. So, Sean, what we try to do here is create a system whereby you really understand and know what's going on. Your head is in check, your technicals are in check, you're taking some consultation from the tools that we give you, and you'll be able to much more easily decide whether, and more anxiety-less, decide whether or not in the face of this kind of volatility, you want to exit this trade and re-enter later or sit it through. One of my most important mentors said to me, put the anxiety into the research so when the trade is on, you're comfortable what's going on. And so that's what I try to do every day still, is put the anxiety into my research so that when these sorts of things happen that are hard in your face, you've got a very, very nice trade going on. You're comfortable with what your technical indicators are saying to you and whether or not you want to get out or let this trade ride, and much more comfortable understanding what's going on with a combination of the things that I talked about, the fundamental aspect of learning what's going on here, the technical aspect of what's happening here, with really, really strong market psychology. And, I want to leave you with that too. I just want to say once again, whichever way you go in your trading life, whether it's with a system or learning the hands-on approach like I like, whatever you do, please spend a lot of time figuring out your head, because whatever's going on in your head is going to get manifested in trading, and a lot of people don't think of it that way. You look out there, you see all these great people who are just traders, and you think of them as high finance and really strong, sharp, super intellectual giants, and a lot of them are, and a lot of them just plain have their act together, but the high percentages of people lose at this. And the reason I say that people lose is not because you're undercapitalized, because overcapitalized people, such a thing, lose too. It's because you're working something out in your trading that needs to get a handle on. As I mentioned earlier, if it's about a credit card bill, it's about a house payment. If it's about anything other than having a clear head and trading for the sake that you believe that this move is the right move to be on, you're going to have a hard time, and it will always be that way. So let me emphasize, whatever way you go, get your head right, because that's where it's at. Any other questions? Trading beyond the matrix, unemotional like a cold fish. I'm going to tell you, Jim, it's impossible. It's impossible to be unemotional, I think. Trading is an emotional business, but you can turn it into something that's far more objective than you would believe, and reduce a good deal of the anxiety, but it only happens when you have a super solid grasp of what's happening underneath your system in the marketplace. Whatever that system may be, including what I'm doing here today. What I'm doing is a form of a system. It's more manual, it's much more hands-on, but it's still a system of sorts, and you can reduce anxiety dramatically. Can never get rid of it because we're human, and we do, no matter how hard we try a lot of emotional stuff into our trading. But you got to get that worked out, because if you don't get that worked out, it's probably not going to work out. That's where it's at. The numbers say this. I'm not making it up. That's just where the numbers are. The overwhelming majority of people don't succeed at this. And as I say, it isn't because you're undercapitalized, in my view, because you're not doing it right and there's something in the way. Any other questions? Happy to take them. All right. You're welcome, Sean. Thanks, everybody. I really appreciate your time and your being here. And I know it's been a long day, and I appreciate it. Thank you so much.